Hello and welcome to the latest episode of No Accounting for Taste with me, Matthew Ward, and the familiar voices of Accounting Web's managing editor Richard Hattersley
Hello, everybody.
and technology editor Tom Herbert.
Hi, Matt. Hi, everyone.
We're back for another look at all the big goings on in the world of tax and accounting. And Tom, you're going to kick us off this week with a smorgasbord of tech chat. You're back from Sage's big user conference in Atlanta. How was the most populous city of the state of Georgia and the birthplace of Oscar-winning actress Julia Roberts?
Goodness. Well, there you go. Didn't know that. Yeah, I liked it. Yeah. I hadn't been before, and it was kind of nice to go to a conference that wasn't in Vegas. Yeah, it was quite green. It was quite walkable. When the jet lag woke me up at 4:30 in the morning, day one, I went out for a bit of a wander. Popped into a breakfast place. Big hello to the Atlanta Breakfast Club. I did make the mistake of asking the waiter what the locals had for breakfast, and he brought out the Atlanta delicacy, the chicken waffle sandwich, which was quite the meal. Sort of two massive waffles with a big hunk of fried chicken in the middle with hot sauce and maple syrup. It was kind of like a meal that my 9-year-old would sort of bring forward as his perfect meal. I like the constituent parts, so I kind of disassembled it. I had the chicken and hot sauce for first course, and then the waffles and maple syrup for pudding, and that was fine. Also, hello to my taxi driver Joe Lawn, who basically made me say things in my rich English accent the whole journey, like potato, and then just roared with laughter. So, I know the Brits are worried about how much they should tip in the States, but I was genuinely sort of wondering if she should have been tipping me for the entertainment. But, don't worry, listeners, I tipped her.
Well, you're back in English realms, Tom. What have you brought back to us in the big accounting tech grab bag this week?
So I've got two kind of stories for you on a fairly loose theme of tech adoption isn't all about the technology. So what do I mean by that? I think there's a school of thought that in all great tech advances that we've seen, the winner or the winners are the ones with the best technology, to which I would counter, why do the vendors all give away so much free stuff at trade shows? But apart from that, apart from giving away free stress balls, I'd say there's plenty of other ways to get the attention of people at these pivotal moments in tech. I mean, it feels like we're pretty early in the adoption curve when it comes to AI in accounting software. And when I've spoken to accountants or bookkeepers at conferences or events this year, I think the majority are still, I mean, they're either confused or they're too busy to care or a little bit scared about hallucinations, inaccuracies, or having their jobs taken, right? So I think to push this a little bit further, I mean, even if you had an all singing, all dancing AI solution that solved all your problems, I think you'd struggle to get buy in from accountants and bookkeepers at the moment because people don't understand or they fear AI. So I kind of feel like if there's a winner in the latest big tech shift that AI represents, it's likely to be the vendor that can explain the technology in the clearest way possible and sort of take people along for the ride, similar to how Zero did it with cloud accounting in this country and how Sage did it in that first wave of accounting software back in the 80s.
So, did Big Green go big on AI in Atlanta, Tom?
They certainly did. Yes. In the podcast I recorded there with Sage's CEO, Steve Hare, which you can listen to on this feed right now, maybe straight after this, but also on stage and in all the sessions, Sage went to great lengths to explain the sort of the different types of AI they were using on the platform, which they classified as waves. And I think they very much see it as a great way to sort of leapfrog the competition, as it were, that, perhaps they got a bit left behind in the sort of move to cloud, but they're at pains to explain that they've caught up and now they're pushing ahead with their AI waves. So wave one very briefly being about these specific narrow tasks like reading invoice data, anomaly detection, transaction classification. These are things that have been present in accounting systems for years, right? But wave two is this new wave of generative AI in the platform, mainly through Sage Copilot, their chat assistant. So I guess this is actually how you use the system, how you interact with the system. So making commands or asking questions in natural language for things like chasing clients for information or customers for payment, generating age debtor reports by just typing in who owes me money in the top nav bar rather than click, click, click. Um, and that is, I mean, Sage Copilot was rolled out, I think, just over a year ago now, and that is sort of slowly expanding. Um, and Wave 3 is very much the new buzzword, so agentic AI. So Sage CTO Aaron Harris reckons that's going to fundamentally change the way people interact with accounting software. Now, this is coming in the next year and a half. In a nutshell, it's sort of connected AI systems that sit across Sage's various products and platforms, and they're able to complete workflows across all of those. So I guess the ability for customers to ask, again, natural language questions like what caused the drop in Q2 revenue, um, and receive answers that can then be drilled down into and acted on, perhaps sometimes in an automated way. And they also announced sort of two features they hoped would provide a bit of trust and transparency in their AI. So there's a sort of audit trail addition to Sage Copilot, so users can work out how the system reached its answer, and also an AI trust label, which they're apparently going to add to every piece of AI work that's completed by the system, so users can understand the process. They can understand where the data comes from and how it's in compliance with all the various data regulations and laws, as it were.
So what was the feeling like on the show floor, Tom? What was the vibe of the place?
I think a lot of people on the show floor were enthusiastic, but I didn't really speak to anyone who was using it at any scale yet. So I think that there'd been a lot of uh, experimentation, some sort of AI subgroups or teams that have been sort of kicking the tires on various things. But yeah, I'm cautiously optimistic. I'd say there. But I think moving on to the second part of my tech advances aren't all about the tech um, theme. I think, if you're not in the mood for educating the market, there is another way for vendors to make sure their product has a ready market of customers. The bad news is you need to have billions of dollars to achieve it. So, in Atlanta, I got talking to David Leary, who hosts the accounting podcast over in the States, and he was telling me about Thrive Capital. So, this is a VC venture capital firm that had invested $1 billion into OpenAI, the parent company of ChatGPT. Um, Now, in 2023, Thrive created Crete Professionals Alliance. That's an umbrella group that's been buying up traditional accounting firms with the idea of making them more efficient, more profitable with AI tools. Which AI tools, you might ask? Oh, the ones that the parent company are invested in. Of course, OpenAI products. So, I mean, these subscription fees are no small gravy. So, Crete already generates more than 300 million in annual revenue. It's got more than 20 accounting firms, 900 employees spread across 17 offices. The people behind this roll up were talking about doing the same thing with vet practices or plumbers. So they're experienced in this type of roll up, and then now they very much got the accounting industry in their sights. And I think the conditions already exist over here. So I guess the most familiar name to a lot of our listeners or viewers would be HG, who are a private equity company that owns or has stakes in software like Access, Audit Board, Bright, Caseware, Dext, Iris, Lucanet, Silverfin, and Visma. But it also owns a co-controlling stake in Azets, the global accounting firm that has, I think, more than 7,500 staff, nearly 100,000 clients, revenues of 700 million. Now, I don't know the exact tech stack that each Azets firm, his sort of office is rocking. But I'd be astonished that if it didn't feature some of the software that I just mentioned. So as I said, there are plenty of ways of winning the tech race without having the best technology. But I always thought Betamax was better than VHS. So there you go.
Great, great. Now, Richard, we had the spending review last week, and while there wasn't an awful lot of interest there for us, it did provide some food for thought around the government's approach to tax policy making. What have you got for us?
So yes, we had the spending review last week. I knew there wasn't going to be any massive tax announcements in advance. We all knew that. We kind of expected that. But I think we've kind of been trained to expect tax changes whenever the wind changes and someone from the Treasury stands up in Parliament. So I guess part of the problem with having one fiscal event with tax announcements a year is that every Treasury announcement is treated with even more scrutiny, and you're kind of hoping for a little bit more drama, hoping that something is going to kind of happen there. So I think the thing is, as a media, as the media, we become a little bit starved of announcements. So we're looking for our next fiscal fix, and that was definitely the case with the spending review. But um, let's be honest, there wasn't an awful lot there for us here at Accounting Web to for our attention. There, sure, we kept a close eye on the proceedings, but for the most part, there wasn't an awful lot during the presentation to get excited about. Um, However, I think once the spending review was over, that's when obviously a little bit more interest for us. The documents dropped, and tucked away on page 16 was the news that the government had confirmed a further £500 million investment in HMRC's digital services. And the ambition there is to take HMRC to becoming a digital first organization, and the investment will be used to increase customer digital interaction from around 70% to a minimum of 90% by 2029-30. So we had that, the usual reaction, as you can imagine, on the article we posted on Accounting Web. Um, and this ties nicely to another document that was released on the same day. So whilst we had the excitement or lack of excitement around the spending review, we had this other document land on the same day called the Tax Policy Making Principles. So essentially, this document is kind of like a pledge from the government. It's the principles from which they're going to make their tax policies. I mean, appropriately released on the day of the spending review to kind of quash any doubt that there'd be any tax announcements. So I thought it would be interesting just to have a quick look at this document because it it kind of it positions the government's thinking when it comes to making tax, and for it to land on a day like the spending review, it kind of is almost like a the reason at the bottom is kind of the footnote to the spending review to anyone who thought there might be any additional announcements. It's not happening at the spending review is essentially what the document landing on that day suggests. So let's start with the concept of the document. It's a it's welcome in the sense that the government is attempting to assure taxpayers and agents that gone are the days of making tax policy on a hoof. It also continues a consistent message that we've heard from the government about stability and having only one fiscal event with tax changes. And look, I remember constantly hearing from accountants about the need for stability so they can help their clients with long-term investments. So yeah, so far so good. It's kind of good to have that assurance. But then we get to this part in the introduction, which I thought was kind of interesting, and it made me think whether what this would actually look like in practice. So the document reads, it is important that the government works in a smarter, more agile way to deliver change quickly, whilst fully and flexibly engaging with individuals, practitioners and businesses in the development of tax policy. I mean, the fully and flexible part, I mean, it kind of leaves quite a bit of room for interpretation there.
So, what are the principles? These principles that you mentioned a few times there, Richard.
So Step one, as they go into these principles, is around the need for predictability and stability. So they say, where possible, the government will look to provide further predictability and stability to taxpayers by indicating a clear direction of travel for the tax system. Next is having a smart and agile approach to consultation. It noted that tax professionals find responding to multiple consultations published um, in a quite resource intensive, and they would kind of prefer a spread to spread the burden. Um, so that's pretty positive, I would say, and I'm sure many of our readers would find that positive as well, that they're being considered in this actual process. It also pledged to engage, again, as we mentioned a moment ago, fully and flexibly with stakeholders on the development of tax policy wherever possible. So they say most the government most will also be able to deliver change quickly. Hence, it will work flexibly, considering where and when it is appropriate to engage on tax policy with external stakeholders and consider the best channels for doing so. I mean, that sounds slightly vague there about the whole working flexibly. I understand the need to work flexibly there, and it's good that they've acknowledged that, because too often we've had things thrown at us over the past few years. Um, but kind of, I, I kind of would like to hear more on that. It still feels quite vague. And later it said, in some cases, it will not be appropriate or practicable for the government to formally consult on tax changes. These cases include, but not limited to, simple rate and threshold changes. Okay, it kind of makes sense. And where there is significant forestalling risk, the government will consult on tax policy where it deems it necessary to do so. If a consultation is needed, it will be targeted, precise, and only seek information that is genuinely needed. They also said that there's no one size fits all approach for consultation. To deliver change quickly, the government will ensure that consultations last a proportionate amount of time to allow a sufficient scrutiny of proposals without unduly delaying policy implementation. Um, so yeah, all very sensible. But again, it's a delicate balance, and I guess being somewhat vague there, and obviously not committing, but kind of outline at the front there what their principles are. Um, at least it kind of lets us know what's happening. But as poor Falvey, a tax partner at BDO, pointed out, the recent example of proposed changes to businesses and agricultural relief from inheritance tax. With those, there was only a limited consultation on the technical aspects of the new rules, and he said that many argue insufficient consideration of wider impacts on the sustainability of family businesses and farms. So whilst it's kind of positive that they're kind of being quite targeted and only kind of bothering tax agents when necessary, or stakeholders when necessary, there's still that concern of, I mean, how narrow they are with these consultations. So, with anything, it is a delicate balance, and I appreciate that they don't want to overburden people with um, all these consultations and the like. But it is a delicate balance, and I kind of appreciate that they're putting out this document highlighting that it's a delicate balance. But how that works in practice, I mean, who knows?
It's. I was going to say a lot of that does seem to make sense, kind of on the face of it, but we know the tax world doesn't necessarily always work that way, does it?
Yeah, exactly. Yeah, these documents are worth seeking out to understand the thought process of the government, and obviously it's a relief knowing that the spending review was happening with the knowledge that we didn't have to have pens at the ready, thinking that another tax announcement was going to be dropping just because the Chancellor was standing up. So that's a relief. So knowing that there is kind of this structured principles when it comes to the government's tax policy making, that's a relief for us, and that kind of makes sense in practice as well. However, I'm intrigued to see if the government will hold on to these principles throughout their time in Parliament. I mean, they've stuck to their tax measures so far, but I mean, they've already buckled under scrutiny over the winter fuel payments. So, I mean, could it be only a time before they have their own version of the pasty tax? I mean, I only read yesterday as well that one of the latest rumours swirling around Westminster is that Rachel Reeves is exploring reversing the decision to charge inheritance tax on global assets of non-dom. So there's already movement there. So whilst these principles are good in practice, um, there's always something that's going to happen, whether that's scrutiny, whether it gets um, a backlash, which becomes a distraction, and suddenly the principles are thrown out of the window, or there could be an economic shock. I mean, who could have expected something like COVID to come along, and for that to do what it did to the whole tax policy making for the previous government? So yeah, in conclusion, yeah, it's good to have these principles, um, but then I guess the flexibility bit is kind of good because the government doesn't really need another pledge to box themselves in. I mean, they've kind of already done that on a number of tax pledges already. They've kind of boxed themselves into a cul-de-sac when it comes to taxes. Um, so that is good to see. But ultimately, one of the other things I thought was good was having tax agents as a consideration in this document, kind of the burden that these policy making would have on them. I mean, too often measures are just thrust on agents, and they're expected to respond during a window which might not actually be good for them and their workflow, and their deadlines happen at the same time. So, if anything, that's a positive. But as I keep saying, it's a balance, and we'll see as the years go on, the months and years go on, whether these principles are upheld.
Well, a kind of question for both of you on that point. Do you expect that they will remain unbroken? You've obviously given some examples there of the fact they're not becoming known for U-turns, but they're certainly not shy to do them, are they? So what do we think over the next 4 years?
I like the sort of Groucho Marx quote of, "Here are my principles. If you don't like them, I have others." So yeah, sort of echoes of the. It does a bit echo the grown-up tax policy that was announced. Was it Theresa May and Big Phil Hammond as a chancellor? I think that was they were talking about grown-up long-term tax policy thinking, and obviously then that went completely out the window with Big Bojo and then Liz Truss and the Kwasi Kwarteng and their mini budget, which our editor was up a hill in Snowdon covering and left his trusty tech editor in charge because nothing was going to happen then. Sorry, I've mentioned that on the pod a few times now, but
Yeah, if only there were some principles that could have guided me during my annual
yeah,
leave booking. Um,
exactly. If the alternative is the mayhem that was unleashed, then I'm very happy that there are principles there, but it's probably sensible to build in a bit of flexibility there.
Smashing. Well, thank you as ever for the insight on that one, Richard. I want to see us out with a fresh look at private equity's presence in the accounting profession, more specifically, the framework governing who can own an audit firm. So ICAS is calling for a multi-stakeholder review of that very framework, and the organisation's private equity working group have launched a new paper looking at the impact on the long-standing rules that oversee audit firm ownership. On the back of this, I spoke to CEO Bruce Cartwright, who very kindly lent me some of his time, with a chat covering audit quality needing to remain unaffected by private equity, why trust must remain earned, the value of identifying models different from those traditional partnership approaches, and what's making it a really interesting time for the profession. Now, that article pulls apart all those points, but the one I want to revisit today is why quality must stand apart from private equity's influence. Now, it was a main point that both Bruce and ICAS wanted to get across. That word quality appearing 20 times across the report, 9 pages. Bruce noted that audit quality is not that different from other business models in the sense that a quality product reputation sells in the marketplace. It's just ultimately good for everyone involved. Why would it then be any different for an audit firm or an accountancy practice than an engineering firm or something different, he said. The report then also stressed that any review of that ownership framework, in Bruce's words, must be undertaken by a wider group of stakeholders than just the firms themselves. Now, he wasn't sure he could define who he would like to see involved in that conversation, but recognised that regulators will have a big say, adding, I think the regulators themselves would come up with the criteria that we're trying to meet before making it clear that audit quality would absolutely be one of them. And it's an interesting crossroads we find ourselves at with this one, Richard, because both private equity and audit have come under scrutiny over recent months. And now here we are with concerns about one influencing the other. It's a fine balance that the profession really needs to get right, doesn't it?
I think we're very much at that stage where private equity has, over the past 12 months, been one of the biggest stories that we've been covering. And it's shaped a lot of various different aspects of the profession that we probably didn't anticipate at the time. And we're still uncovering a lot of that influence. And audit is the latest one. And it's a conversation which I know is not unique to this country. I know, as Tom, you mentioned David Leary, but his co-host Blake Oliver, I know it's something that he's been covering over there as well around the impact of private equity, especially when it comes to um, something like this in particular, and the risk of independence as well. And I think we're all kind of just feeling our way through it at the moment. And look, uh, we've just announced the Accounting Excellence shortlist the other week, and just as a hobby, as I tend to do, as I kind of look through and look at the trends and see what's happening. And so far, private equity is kind of for large firms, is kind of coming up as that massive big trend with all of them. And it's kind of trickling down to the mid tier as well. So it's something which we're going to have to all face very soon, just what the impact it will be. But with anything to do with audit, I can't imagine it's going to be done quickly. It's going to move at a very glacier speed when it comes to that aspect of how the tentacles of private equity is affecting various aspects of the profession.
I think as well that, I mean, why do we have audits? I think this is a sort of fundamental question. The sort of investor confidence that investors in these big businesses aren't going to lose their shirts, public confidence that businesses like Carillion that collapsed, loads of job losses, loads of suppliers losing money, taxpayer money being lost as well. And like the, these big public companies, there is this transparency that's needed that the auditors have been in and they've checked their going concerns, right? Whereas private equity, I think notoriously doesn't have that same transparency. I mean, the clue's in the name, isn't it? Private. And so I think, I mean, I'd be fascinated if any listeners to the pod can let me know, whether an audit firm owned by private equity can audit a large business owned by private equity. Is there an ownership threshold there? Do let us know. So as these sort of complex web of ownership and sort of part ownership. I mean, it kind of reminds me a little bit of the sort of multi-club ownership models that are being rolled out across football at the moment, and the various sort of can't they play in this competitions or that we've seen over the past couple of years. So yeah, it's only going to get more complex, I fear.
Well, perfectly timely, isn't it, Tom, with the kind of Crystal Palace Leon
Yeah.
debacle at the moment? And
Mm.
yeah, like you said, you do wonder, will certain audit firms not be allowed to play with certain other big firms, and is that going to kind of
Yeah.
impact the work they're allowed to do? Yeah, very topical, very nicely linked. Well, that's all we've got time for today. Join us on the next episode of No Accounting for Taste for a roundup of all the big goings on. But until then, take care.